Hello traders, today we want to analyze the price chart with no indicators in a fractal way. So as you know, fractals are repeatable patterns that they follow a simple formula, but they are repeated in different time frames, and no matter how much you zoom in or you zoom out, you see the same patterns. So if you look at the chart as a fractal, if we change the time frames, you will see the same patterns. When you find the same pattern in the higher time frame, you zoom in, you go to the lower time frame, you find the same pattern, and then you can make a good trade. So this is a 1 hour chart, Euro USD. So the first thing that you must determine is the trend. So the beginning of a trend, I put a line here. This is the beginning of the trend. This low here down the market. And the high is, as you can see, is up there. So if I grab my pen, see the flow of the price is like a river. It goes up, down. It's like that, these highs and lows. The high and low are the most important thing in the market. That's the first thing that you should look at. So there are normal highs and lows. Some people are very detailed, have a detailed eye. They see more highs and lows. If you grab a kind of a pen like this and you draw a line like how I did, this is the flow of the chart, the price. The chart is like a river. So now we're gonna start connecting these lines. Let's see, like you start connecting these highs and lows. Just to have a general idea of what's going on in the chart, and when we go to the next step, you'll see how these highs and lows are important. So everyone has a different kind of a view, so you have to try this many times to find your own view. The second thing is the trend lines. So the trend line, that's the low of the market down here. So if you start from here, we connect to the low, to the next low that breaks the high, the first high. So the first low down here, let me grab my pen again. The first low is down here. The first high is up there. So the high, the next high that breaks this high is the one that we connect the trend line. So the next high, but this high doesn't break, so this low is not important. This low is not important. The next high is here, the third high. The previous low is the one that is important for us. So we connect our line over there. So the first one is from the bottom to this low, and we keep going. That's the first trend line. The second one, again, as you can see, the next high breaks the previous high. So the previous low is the one that we connect another line. So from the lowest low, we connect this line, almost like there. So we have two trend lines. So the last high here is still, price is going, it's not formed yet, so we cannot connect anything there, but it's almost close to the previous trend line that we drew. Now, this is the higher time frame. We can draw some other lines like connecting all the highs together. It's like roughly around there. So let's change this color so you can see. Let's make it red. No, that's not visible. Okay, green. All right, that's another line. We can connect these lows together. Yeah, that's a good one. It's a very good support line. Now, the thing is that at the end of this price chart, that's the most important thing for us. But if we don't have these highs and lows, we can't decide where the price is. So we need some support lines as well. Connect these. highs and lows. Probably this is the most important thing, that the last 2-3 highs and lows are the most important for us. Now price is up, we're gonna have a trade, so we have to go to the lower time frame. Now what time frame do you choose for the higher time frame is up to you, but the lower ones you can check all the time frames, but normally it should be 10 to 20 times smaller than the time frame, your main time frame. Because if you're a 1 hour, at least like a 5-minute chart is the target of the target time frame that you're gonna take a trade. But we check all the other time frames as well. So in the 30-minute time frame, nothing much going on, it's the same. In the 15-minute time frame, as you can see, we have a sideways market around here, and then price breaks up the ceiling of this area here next day. So probably it's gonna go back down here and move up, but we don't know yet. So we go to the 5-minute chart. In the 5-minute chart, as you can see, this sideways market is pretty choppy, so we don't need that. So we zoom in and we determine the beginning of this new trend. So this new trend starts there, and the previous highs and lows, this is the top of the sideways trend. Okay, so price breakthrough, comes back down and keeps going. So this is important for us, the trend of the 15-minute chart, 5-minute chart. So we keep going like that. Again, the same thing, because it's a fractal, right? We have to connect these highs and lows. To see where the market is going and how the price is reacting to the previous support and resistance lines. So you keep going like that, because it's a fractal, it's a repeatable pattern. So you have to do the same thing in the lower time frame. Now, when you have this, again, we try to connect the lows and highs to have a trend line. So you have a normal trend line like that. As you can see, we have a support line here. And then we can draw some main support and resistance, and that's the last high. So this is very important, because price is gonna probably trace back to this line, and then that's why it's important. This is the last one. Now, the only thing that you have to look is that in the higher time frame we have an uptrend. So we are, and still there is some space left to hit the previous high. Is it gonna hit the previous high? We don't know, but we have a kind of a tendency that the market's gonna keep going up. So we need to know that, hey, we're gonna enter the market and we're gonna have a buy position. So in the lower time frame, we try to have a buy position. Again, this is an uptrend, market hit a high. Let me zoom in. As you can see, came back down, didn't touch this the previous support, so there's a gap here. You see this gap? This gap probably gonna be filled up. The price came back down to this area and then moved back up. This is how you analyze the chart. You find the same patterns in the previous, in the higher time frame, you take it to the lower time frame, and then you look for the same patterns. Highs and lows, connect the highs and lows, draw the trend lines, and then wait for your signal. It doesn't matter what system you have, it doesn't matter what indicator you use, it doesn't matter what strategy you have. You keep following the same patterns in the from the higher time frame to the lower time frame. Your lower time frame should be at least 10 to 20 times lower than your higher time frame. If you're on a 4-hour chart, probably 15-minute chart is your target, your trading time. If you're on a 15-minute chart, your 1-minute chart is the time that you have to have a trade in. As you can see in the 1-minute chart, the price moved up, down. Probably you have a signal down here from your indicators, from your system, whatever system you have, stochastic, MACD, whatever. It hits the high about 6-7 pips in 1 minute chart. That's probably not bad. If you put it like a one lot trade, that should be good. You have a $60-70. So that's how you look at the price chart. Have a higher time frame and a lower time frame. Fractals are repeatable patterns, remember that. I hope you enjoyed this analysis, and remember, highs and lows and trend lines are the most important thing in analyzing the price chart. Have a good time.